We're here with Terry after a panel discussion we just had here in London, and we were touching upon various topical matters with regard to the energy and resources sectors. One of the things that many panelists touched upon was indeed the wall to capital, if you like. There is demand and there are different models to get around it, but there is a lot to be said about how you do it cleverly and what type of, shall we say, institutional players would be available to participate in various projects, right?
Yes, yeah, it's a major topic, not only on the panel but in the industry, and that's true in all phases of the energy industry, whether you're talking about the regulated utilities that are spinning off assets and parts of their business, or whether it's new infrastructure, or whether it's even, in fact, in the oil and gas business, midstream, downstream. There's a huge amount of capital in the pension funds, in institutional investors, some of it invested with private equity funds, much of it sitting in their bank accounts earning negative rates of return or very low rates of return, whereas they're trying to find a way to get into these productive assets. And on the other side of the table, a shortage of bank capital that's been withdrawn from the market for nobody's fault but the entire liquidity crisis. The corporate side, whether they're the utilities or whether they're the oil companies, are trying to find a way to reach those institutional investors who are also trying to find a way to reach out to the actual asset owners.
Yeah. What type of different models have we come across lately? And I guess there's a couple of things to be said about consortiums and also sort of, if you like, cross-continental participation as well. We've seen both US-Canadian capital being poured in here, but also Australian and Asian also for various sort of strategic or non-strategic reasons.
Right, that's right. Well, the Asians, not so much in the capacity as institutional investors in the sense we talk about them, not the pension funds, but we're talking about the national oil companies, the national energy companies, and of course China Development Bank and CIC, the Sovereign Wealth Fund, acquiring assets or positions in companies for strategic reasons, either access to technology or access to energy or natural resources. On the idea of creating a consortium, it's actually a particularly favorable way to combine some investor, part of the group who has transactional skills, whether that's an existing infrastructure fund, and then a pension fund who has the capital, has the desire for the asset, but doesn't have internal team or ability to go through a transaction structuring and can piggyback alongside either the fund or investment bank that's also putting capital at play.
Okay, interesting. And finally, I wonder how much of this is how often deal makers such as you and your team come across notions of political risk within this context, where maybe shall we say the investor side and the shall we say the party that is either rolling out the project or has the resources at hand, where their interests may or may not be aligned. Is that a topic amongst advisors?
In the oil and gas sector, they call that the above ground risk, which is always viewed as greater than the below ground risk, the geology involved. And even in the energy sector, we've seen right here in the UK, we saw changes in the regulatory regime sort of mid-course, which frustrated a number of investors, both strategic and financial investors in the energy sector. We've seen that in Europe when we saw changes in the renewable regulations in Spain and in Germany, which caught a number of both strategic and financial investors midstream, projects half-built, projects in the pipeline that had to get dropped because the economic assumptions got changed. Why? Purely for regulatory reasons or political reasons. So political risk, even in the EU, even in the United States, not just in sub-Saharan Africa or in Latin America, but political risk is always an issue. When you're investing capital that's going to have a 20-year in an asset that's got a 20-year life to it, that's the economic life, but what's the political life? That's an issue.